Masterclass 2026. If you think auditing is just checklist and paperwork, think again. This masterclass is designed to show you how internal audit really works in the real world, inside real organizations solving real problems. Whether you're a student, a new internal auditor, preparing for professional certifications like ACC, ACIA, or CISA, or just transitioning into an audit domain from another field, you are in the right place. We are here going beyond theory, beyond just mere textbook definitions, beyond just memorizing standards. You will be learning the entire audit lifecycle from building the audit universe, performing risk assessments, planning engagements, executing fieldwork, delivering powerful reports, and driving meaningful follow up and closure of all your audit observations. Everything will be broken down into clear, practical steps which you can actually apply in your profession and in your daily part. By the end of the series, you will not just understand auditing. I will help you think like an auditor, asking the right questions, moving in the right direction, and spotting risks in the right way. And most of all, most importantly, you will be adding real value to the organization which you work for. So let us together build those strong audit foundations. Let's start. Today, we're going back to the basics of auditing itself. Let us understand what auditing actually is, because if you misunderstand the foundation, everything built on top of that becomes shaky, right? Auditing is not just a checklist. Auditing is not compliance. Auditing is definitely not catching people doing wrong things. Of course, we will end up doing that as well, but it is part of the process. Auditing is more of a structured approach. It is about assurance, trust, and in this particular session, we are going to build that foundation properly. At the end of this module, you won't just know what an audit is, you will understand why it exists and why it matters. Are you ready? The word audit comes from Latin, from the word audire, meaning to hear. We have this term auditories and all those things, right? Anything that meaning that actually comes from that Latin phrase. Centuries ago, financial records were read aloud, and an independent person would hear them and confirm their accuracy. This is how the word origin of the word auditing itself came to be. And literally, that is how we have seen it, right? People are verifying and validating things. And today, that meaning has not changed by a lot. We just don't sit and listen to books being read out, of course, but the principle remains the same. An independent person reviews something and confirms whether it can be trusted. That core idea throughout the centuries has not changed. Auditing is not a modern day invention. In fact, it goes down back to 5000 plus years during the Egyptian times. In ancient Egypt, auditors were appointed to ensure that grain and gold collected as taxes were properly recorded and safeguarded. The Romans took it further. Officials would read accounts aloud to an independent party, and this is where we get that word audire or the word audit to mean to listen. So, as I said earlier, auditing literally was meaning talking about listening to accounts being read and judging whether they sounded reasonable and then validating that, of course. Much later, when new civilizations came to be, even in the good olden days, the rulers wanted to check the tax collectors because they were afraid that tax collectors were pocketing money from what they're collecting, and that was not reaching the king's treasury. So this is one of the reasons why they officially appointed auditors. In India during the times of Chanakya, he has in fact spoken about and documented in his treatises that there were more than 50 plus ways of fraud in which he had identified, and then he had devised controls to plug those issues which were, or the loopholes which were there in the system. This over a period of time evolved, and we owe it to these people who have done it without having documentation, without having anything. They found things by their own, and they have developed it for us. So we are thankful to them for that. And much later in the 19th century, during the industrial revolution, companies grew larger. The world faced the first time when the Dutch VOC, which was one of the early day companies, which was one of the first ever joint stock companies, was invented and created by the Dutch. And then we had the East India companies, which are also bringing many things to the table. And when during the industrial revolution, the companies actually become quite big, and financial audits became necessary. And the 20th century, things changed drastically when regulation increased. Then internal audit concepts also developed. And today, we just don't audit money, right? We audit systems, we audit cybersecurity, data governance, even AI, cloud. And audit has evolved even as the times have evolved. As long as risk exists in the world, as long as humans make mistakes, as long as systems fail, and as much as governance gets weakened, we have seen it around the world. Executive misconducts which have happened, Enron, WorldCom, Parmalat in Italy, Bernie Madoff, people like Raj Rajaratnam, all of those things have triggered insider trading, fictitious assets getting created, Ponzi schemes, this get rich quick kind of schemes. Then you have bribery, racketeering, improper business practices, accounting fraud, improper payments, illegal activities. Things started going bad, right? The more things start going bad, the more the auditor's role becomes important. So when leadership fails repeatedly, the consequences just don't stick to one organization, it goes beyond. Public trust declines, investors lose confidence, markets tumble, and eventually this is where government starts stepping in. And our history tells us a story. It's a clear pattern across centuries and centuries. Corporate scandals, public outrage, new regulation, over and over again. Have we not seen it in the last 5,000 years as we saw? As audit evolved, it also meant that there were new risks which are coming in. And every time governance was getting weakened, oversight was failing, regulations increased. And for what? Why? Because society demands accountability. And auditing plays a very critical role here. Strong audit functions can detect weaknesses early, prevent major failures, strengthen governance, reduce the likelihood of regulatory backlash. And in many cases, regulation is not created because businesses succeeded. It is created because they failed. So when we talk about auditing, we are not just talking about checking controls. We are not talking about checklist. We are not talking about just these basic things. We are talking about protecting trust. We are talking about stabilizing systems before they collapse. This is why governance, independence, assurance, all these are buzzwords throughout the life cycle of humankind. Because weak oversight, which starts today, can become legislation tomorrow. Audits are conducted for many reasons. They help ensure that operations are effective. They help confirm compliance with regulations. They assess the protection of information assets. Most importantly, they provide assurance to stakeholders. Stakeholders being the shareholders, could be the board of directors, the owners, the governing body of the organization, about the financial, operational, and ethical well being of the organization. Think about it, if everything was perfect, would we need auditors in the first place? We audit because risk exists. We audit because humans make mistakes, and we audit because governance can also get weakened. Audit in that scenario exists because uncertainty exists. And one of the most obvious reasons why we audit is to detect weaknesses. We don't just say this is wrong. We say, here is the risk and here is how the control can be strengthened. We are not fault finders, we are truth seekers. We don't just, but we don't implement the controls, mind you. We don't own the risk. That lies with the management, with the governance. Auditors cannot design and implement controls because independence will be compromised. That's a balance which we should always maintain. Auditors are the support function. They support the governance, they support risk management, they support internal controls. And as people always think about auditors as police, we are not. That reframing is required because everything in audit connects back to these four pillars of why we need to audit: to provide assurance, to detect weakness, to support governance, and finally to recommend improvements. As organizations became more complex over time, the auditing profession also evolved. It is no longer about just about checking numbers. Let us talk about some of the major types of audit you will encounter in your life. Financial audit. This focuses on financial statements, its revenue, expenses, assets, liabilities, profit, loss, you know, balance sheet, and all those things. The objective here is to determine whether financial reports are accurate and fairly presented. Next, we have compliance audit. Compliance audit is where you are complying with certain regulations, policies, procedures. Next, we have forensic audit, where something has gone wrong and we are going to investigate that. It may be a fraud, misconduct, anything. Probably for legal proceedings, we'll be doing evidence gathering and so on. Then we have information systems or IT audit. This is where things get interesting because today's world, everything is built on systems, right? Yeah, of course, we talk about people, process, and technology, the PPT of the world. But even as we say that, technology dominates a lot of the discussions. We examine systems, access control, cyber security, data integrity, infrastructure, and system reliability. We are auditing things that most people don't see or not able to see, but completely rely on at a higher level. Then we have many other types: operations, administrative, and so on. But let's think about one, that yes, these are different types of audit, different categories of audit. But you know what? When you're in your audit journey, you may find that a single audit engagement can include multiple types of audit in the same engagement. It can include financial, operational, IT components together. The type of audit simply defines the primary focus. Understanding these types helps you recognize what is being examined and why. Now that you have understood why audits exist and the different types of audit, let us define something critical. What are the audit objectives? Regardless of whether it is financial, operational, IT, forensic, every audit ultimately tries to achieve four core things. The first is to ensure effective and efficient operations. This means the auditor is asking, are processes working as intended? Are resources being used wisely? Are controls preventing waste or breakdown? An organization can be compliant and still be inefficient. Auditors don't just look at the legality aspects, we look at effectiveness as well. Second is confirm compliance with laws, regulations, and internal policies. Organizations always operate under legal and regulatory frameworks. Failure to comply can lead to penalties, reputational damage, and even shutdown. Auditing helps to ensure those obligations are being met consistently. Third is providing assurance on financial, operational, and information integrity. Here is where the auditor is saying, based on the evidence, we believe that the information produced by this organization under these categories, under these scenarios, are reliable. In terms of financial statements, in terms of operational data, in terms of system outputs, these are reliable. Without integrity of the information, the management decisions will collapse. And last but not the least, audit objectives are to strengthen risk management and preparedness for future challenges. Auditing is not a post mortem, as they say. Auditing is not backward looking. Auditing helps organizations identify vulnerabilities before they turn into crisis. It strengthens resilience. If a new regulation comes, if a cybersecurity occurs, if a market shift happens, a well audited organization is always better prepared for it. So if you think of audit objectives, think of it from these four things, these four keywords: effectiveness, compliance, assurance, and lastly, resilience. That is the true purpose of auditing as we see it. Senior management and the auditor and the board cannot see everything. They rely on independent assurance. This is where the auditor comes in. You can say in layman's terms, the auditor is the eyes and ears of the board, of the stakeholders, of the organization. And here assurance means that controls are designed properly, controls are operating effectively, risks are being managed in an efficient and effective manner, and this connects directly to governance and independence. So, when in doubt, always remember audit exists to provide assurance to leadership. And when we talk about assurance, what we are saying literally is that we have reviewed it, and based on our standards and evidence, we trust that it works as intended or as it's supposed to work. And that's how powerful the audit assurance is. There are two types of assurance. Again, depends on who is providing it. If an internal auditor is providing it or an external auditor is providing it. If an internal auditor is providing, he is providing independent and objective assurance to the board or the audit committee. And the focus is on evaluating the governance, risk management, and control processes across the organization. However, on the same side, if an external auditor is providing it, he provides an assurance to the external stakeholders, shareholders, regulators, public, and so on. They are not talking to the internal stakeholders, they are talking to the external stakeholders. That is why it's called external audit. And the focus is on independent opinion on the fairness and accuracy of financial statements. And on the last but not the least, management assurance is to provide assurance to the management on the effectiveness of internal controls within business operations. And this talks about day-to-day controls, review of various compliance checks, process self-assessment, and so on. An audit is not powerful simply because it is just there. It is powerful only when it is credible. And credibility comes from five foundations or five pillars. The first being independence. Auditor cannot audit his own work. Auditor must not report to the person they are evaluating. An auditor should not have personal interest in the outcome. This is in very, very simple terms what independence is. And without independence, credibility and trust goes away. Next is objectivity. An auditor must evaluate evidence without bias. We should not be swayed by influence. We should not defend management. We should not accuse management as well. We assess based on facts. As I told you, we are truth seekers and truth finders. And we talk only based on facts. Third is evidence based conclusions. As I told just in a fallout of the previous one, that we are unbiased. That means that what we gave as conclusions should be based on the facts, based on the truth. So audit opinion cannot be guesses. Audit opinion cannot be feelings. Audit opinion cannot be emotions. Audit opinions are based on documented evidence. It can be in the form of policies, logs, transactions, testing results, analysis, interviews, and so on. If there is no evidence, the conclusion will not stand. Fourth is systematic methodology. Auditing is a structured and repeatable process. It follows defined standards. It follows defined steps and processes. It is a planned way of doing and performing this process. It cannot be random. And finally, it should be based on a professional competence and done in a very professional manner. The auditor must understand what they are reviewing. Auditor must understand the systems, the processes, the people, the culture, the technology, and everything else. A financial auditor must understand accounting. An operational auditor must understand the processes. An IT auditor must understand systems. Independence without being competent is dangerous, and competence without independence is biased. These are coexisting and correlated to each other. And this is what finally gives us real weight in terms of our assurance. So these are the foundations really of credible auditing. An audit is not just about asking, do I think this looks okay? Right? An audit always compares reality against something. That something is called audit criteria. Audit criteria are the standards or benchmarks which are used to evaluate whether controls are adequate and effective. If you don't define what good or the right way it looks like, how can you determine what weak or bad looks like? You can't, right? That is the whole objective of having audit criteria. So these common criteria include internal policies. For example, if you are doing an IT review, it could be an access control policy requiring periodic review. Standards. What are the standards which are applicable? What are the rules and regulations of the company? What are laws and regulations which are applicable? Can be in terms of financial regulations, industry requirements, data protection laws. If you are working for a payment card industry, then the PCI DSS will be applicable. If you are working for a healthcare company, HIPAA will be applicable. Frameworks, governance and control frameworks that expect certain practices to be there. Contracts and agreements, service level agreements, vendor security clauses, and sometimes even best practices which are there across industry practices which are supposed to be followed by us, which will help us to do things in the right way and do things in an effective manner. And overall, if you think, an auditor does not invent expectations. He cannot. He has to evaluate whether management is meeting defined criteria or expectations. If the criteria is unclear, the audit becomes subjective. If the criteria, however, is defined properly, the audit can be unshakable and defensible, and you will be ensuring that you are doing always the right thing, and your whatever conclusions you are giving are grounded in facts and grounded in truth. And that is what we strive for, right? As an auditor, this is what we strive for. So I hope you really got an idea of what auditing is all about, the basics of auditing, and what an auditor does, why we exist, and what we do, how we do things, what are the criteria by which we are governed, and what brings us together. The next video we'll talk about a very important topic in the process, which is the audit charter. If you enjoyed this video, please give it a thumbs up. Leave your questions in the comments and hit subscribe button for more practical tips and structured insights on internal auditing. This video is part of our ongoing Auditing Masterclass series. You subscribe to it and you follow along to master every concept of internal auditing step by step. See you in the next session. Happy auditing. Bye.